Did you know that India is on track to become the world's third largest economy by 2027? All the stars are aligned. Let us explore how you, as an investor, can ride this transformational wave.
When I first visited the US as a Prime Minister, India was the 10th largest economy in the world. Today, India is the 5th largest economy. And India will be the third largest economy soon.
India is doing incredibly well. I have to say that India is the fastest growing of the large economies in the world. If India continues with its reforms, I think India in the coming decade can become a $10 trillion economy. And
10 years ago, we were the 11th largest economy in the world. A decade later, we are the 5th. I find it embarrassing to tell others that we are going to overtake them and will be third soon.
India, which is set to grow more than 6% this year. That's more than any other major economy. According to the IMF, an increase in Indian domestic investment is key.
आने वाले 5 साल भारत के इंफ्रास्ट्रक्चर को एक नई ऊंचाई देने वाले होंगे। आने वाले 5 साल भारतीय रेल के कायाकल्प के होंगे।
In this video, we'll be diving into the India's growth story, focusing on the booming capital goods sector and how you can capitalize on this opportunity. India is gaining global significance, becoming a $3.7 trillion economy, the 5th largest in the world, and on track to become the 3rd largest, all thanks to the young working age population with a median age of 28 years, increasing foreign and domestic investments, capex cycle on the rise, growing manufacturing sector, China plus one factor, increasing consumption, infrastructure push, and a positive geopolitical image. All these factors puts India in a very favorable position for unprecedented growth. Virtually all major countries and institutions are bullish on India. The sentiment is perfectly captured in a 2023 S&P report which says China slows, India grows. In April 2024, IMF has raised India's growth projections to 6.8%, higher than that of China at 4.6%. Jeffries has said that India will become the 3rd largest economy by 2027. Also, they have said that India's stock market valuation would be touching $10 billion by 2030. First things first, economic growth of a country is measured by the gross national product or the gross domestic product of that country. It is basically the sum of consumption, investments or gross fixed capital formation, government spending and net exports. In order to become a superpower, we'll need a GDP growth of around 10% for a sustained period of time. This would be achieved by a combination of GDP growth, inflation and total factor productivity. India would need an extensive amount of investment, both internal and external, into formation of capital goods. Let's get our basics right first. What are capital goods? Capital goods are durable produced goods which are in turn used to produce further consumable goods and services. These are written as fixed assets in balance sheets. Factories, airports, roads, machineries, tools, vehicles are examples of capital goods. There's something called as ICOR, which stands for Incremental Capital Output Ratio. It measures how many units of additional investment or capital formation is required for increasing our GDP or output by 1 unit. In our case, it is generally around 4, which means in order to increase our GDP by 1 rupee, we need to increase our investments by 4 rupees. Our country is currently investing 28% of our GDP into gross fixed capital formation, which is nothing but infrastructure building. For China, this number has traditionally been above 40%. For Singapore, it is around 30%, and for Bangladesh, it is around 32%. We are still lagging in this area. Hence, Government of India has increased spending on infrastructure like energy, railways and defense. They have also taken initiatives like Make in India, National Infrastructure Pipeline, Gati Shakti, Bharatmala Pariyojana and PLI scheme. This creates a huge opportunity in the capital goods industry. The total spending by the government and big companies has jumped from 14.3 trillion rupees in 2019 to 21.3 trillion in FY23. In October 2023, CRISIL reported that India's infrastructure investments are projected to increase to 143 trillion between FY24 to 2030. Private companies are also increasing investments in energy projects, data centers, and EVs. Industrial automations, digital technologies, sustainability, and green projects like circular economy, wastewater treatment management, etc., are also observing increasing in investments. That said, here are 7 capex or infrastructural themes that might play out in a big way in the next 1 to 2 decades. Friends, please note that the stocks discussed here are not recommendations of any kind. Please invest wisely and conduct thorough research before taking any financial decision. The Indian Railway is regarded as the foundation and the lifeblood of our economy. It consists of a total track length of 67,956 kilometers with 7,335 stations, making it the 4th largest in the world after US, China and Russia. In FY 22-23, Indian Railways achieved 1,512 metric tons of freight, which is a 7% growth from the previous year. For FY25, Railways capital expenditure is set at $30.3 billion. Indian Railways has set a target to achieve net zero carbon emission by 2030. The government is encouraging private investments in passenger trains and station redevelopment, expected to attract over $7.5 billion. Indian Railways plans to introduce 3,000 new trains, increasing passenger capacity from 800 million to 1 billion. The National Rail Plan aims to accelerate the critical projects like 100% electrification of Indian Railways and speed upgrades in key routes. They are also advancing the signaling and telecommunication systems, with 15,000 kilometers to be converted to automatic signaling and 37,000 kilometers to be fitted with Kavach, a train collision avoidance system. Here are some of the key players. IRCTC is a mini Ratna company which is involved in catering and hospitality, internet booking, travel and tourism. IRFC is the dedicated financing arm of the Indian Railways. Rail Vikas Nigam Limited is involved in implementing rail infrastructure projects like adding new rails, railway electrification, major bridges, etc. Then there is Ircon International Limited, which is an Indian engineering and construction corporation. Then there are Titagar Wagon, Jupiter Wagon, which are engaged in the manufacturing of railway freight wagons, passenger coaches and wagon components. Container Corporation of India is engaged in the transportation and handling of containers. RITES Limited is the only exporter of Indian Railways for providing trains overseas. BEML manufactures a wide range of heavy earth-moving equipments catering to mining and construction industry, vehicles for defense forces and coaches for the metros and Indian Railways. The road network in India is vital for our economy, much like the nervous system in our body, which delivers nutrients and blood to every cell. India boasts the second largest road network globally, spanning approximately 6.7 million kilometers. The extensive network handles 64.5% of the nation's goods transportation and 90% of the passenger traffic. Between FY14 and 23, national highway construction in India grew at a CAGR of 5.3%. The government of India has earmarked $1.4 trillion for the National Infrastructure Pipeline by FY25, with the road sector expected to account for 18% of the capital expenditure. As of November 2023, India has 352 public-private partnership projects worth $76.95 billion. The government is focused on increasing corporate investments in the roads and shipping sectors. According to Amit Kumar Ghosh, Additional Secretary of Ministry of Road Transport and Highways, private investments in the highway sectors are projected to rise from approximately 20,000 crores annually to nearly 1 trillion rupees over the next 6 to 7 years. In the next 5 years, the National Highway Authority of India is projected to generate 1 lakh crore annually from tolls and other sources. In October 2023, Chrysler reported that the AUM for infrastructure investment trusts InvITs in India's road sector are expected to nearly double by March 2025 from current 1.4 trillion rupees. Some of the important players are L&T, GMR Infra, Reliance Infra, Hindustan Construction Company, Dilip Buildcon, etc. According to Ministry of Shipping, 95% of India's trade by volume and 70% by value is conducted through maritime transport. India has 12 major and over 200 minor and intermediate ports. The National Perspective Plan for Sagarmala includes development of 6 new megaports. The Indian government allows 100% FDI in ports and harbour projects and offers 10 years tax holiday for companies that develop, maintain and operate ports and inland waterways. India plans to invest $82 billion in port projects by 2035. In the Union Budget 23-24, the Ministry of Shipping was allocated $1.8 billion. India's transshipment cargo is mostly handled at foreign ports, but the Adani Group's Vizhinjam port has been approved as India's first transshipment port. This will enable India to attract very large container and cargo vessels, boosting traffic and revenue for the country. The government is developing Maritime India Vision 2030 to create world-class mega projects and transshipment hubs with an estimated investment of around 1.25 lakh crores. Some of the important players in this sector are Adani Ports and SEZ, JSW Infrastructure, Gujarat Pipavav. These are engaged in development, operations and maintenance of ports. Cochin Shipyard Limited is a leading player in construction of all kinds of vessels, repairs and refits, including periodic upgradation and life extension of ships. The Central Electricity Authority of India and key industry players expect increased activity in the power transmission and distribution sector. A spending target of 2.4 trillion INR by FY30 translates to a yearly market of around 300 to 500 billion rupees. As per CEA and Chrysler report, larger share of investment is expected to be seen in the extra high voltage space. Check out how transformers would play an important role in the AI theme and the transformer crisis we are currently facing. I'll provide you the link in the I button. Now, demand for T&D products is rising both domestically and internationally. Additional generation capacity is expected to boost transformer demand. The sector's capital-intensive nature and high lead time creates an entry barrier which would limit the competition to the incumbent players, giving them a pricing advantage. Only 6 to 7 major players control the value chain due to high entry barriers and extensive testing requirements for high voltage transformers. Companies like Siemens, Hitachi Energy, GE Transmission and Distribution, Trill, CG Power, Bell and Schneider, which offer HVDC, high voltage transformers and switchgears, are well positioned. Other companies like Voltamp, Techno Electric, Transrail are enhancing their technical capabilities. In the EPC segment, Kalpataru and KEC aim for a 20 to 25% market share, with L&T expected to participate in larger projects. India is witnessing a significant shift in the manufacturing dynamics from agri and textile based products to more sophisticated products which involve technology, skilled labor and innovation. According to a report by Colliers, India's manufacturing market is expected to reach $1 trillion by 2025, with Gujarat, Maharashtra and Tamil Nadu leading the race. Currently, manufacturing contributes 17% to India's GDP and the government is planning to raise it to 25% in the next few years, given the FDI inflows, initiatives such as production-linked incentives and policies like Make in India. Major sectors like automobiles, auto components, electronics manufacturing, renewable energy, pharmaceuticals are covered under the PLI schemes. Indian government has set a target to achieve energy independence by 2047 and a net zero emissions by 2070. We plan to achieve a renewable energy target of 500 gigawatts by 2030. The government has allocated 19,500 crores for a PLI scheme to boost the manufacturing of high-efficiency solar modules. The Green Hydrogen Mission was launched to set up 10 million tons of green hydrogen facilities. By 2030, the Indian government has committed that 30% of the new vehicle sales in India would be electric. Future market growth is anticipated to be fueled by new trends including electrification of vehicles, particularly three-wheelers and small passenger automobiles. Along with renewable energy, we have multiple sub-themes like power generation, waste management and recycling, water recycling and conservation, electric vehicles, smart grids and storage batteries, etc. Some important players in this segment are Waaree Renewables, Inox Wind, Power Finance Corp, GAIL, JSW Energy, Borosil Renewables, NHPC, Gravita India. The IT infrastructure that stores all the data and applications is called a data center. The data center capacity in India is expected to double in the next 2 to 3 years, and the data center market is projected to reach around $9.8 billion by 2028. Recently, India has become the data center leader in the Asia Pacific region excluding China. Between 2018 and 2023, India's data center industry secured investment commitments of more than $40 billion from both global and domestic investors. Some important players include ABB India, L&T, Siemens, Cummins India, Marine Electricals, Kalpataru, KEC, etc. In this video, we have discussed the India's growth story and 7 important capex themes that are going to shape this story. There are 2 other themes that are going to play an important role, that are defense and AI. If a long-term investor is willing to bet on the future of India, they can focus on the sectors and subsectors we have discussed. We think these themes would play out very well in the next 1 to 2 decades if proper planning and execution is done. I sincerely hope you liked the video. If you found it useful, please do like and share the video within your circle. Subscribe if you are new here and check out our blog prudentparrot.com. The link is in the description box. Also let me know in the comments which companies you hold among the ones we have discussed and the theme you are most bullish on. Thank you and see you next time. Until then, stay prudent.